take a look at what we can expect going forward. Now, if everything is ready, if everyone is ready, we're kicking this off, yeah? So first, let's start off with the Fed rate cut expectation as you see within this screen on the CME group. Now, according to this the Fed Watch tool, initially there was a 50% chance of a 50 BPS cut by the Federal Reserve in its meeting next week. Like we covered that previously. However, recent developments have changed the landscape significantly, where we got statements from former New York Fed Chief Bill Dudley and a tweet from Nick of the Wall Street Journal, who is known as the Fed Whisperer. They basically have pushed the probability up to 50%, right? As we can see right here. Now, this has created an unusual amount of uncertainty ahead of the Fed meeting, as markets are typically more confident about the direction of such decisions. In a recent discussion in Singapore, Dudley made a strong case for a 50 BPS cut. He argued that there are solid reasons to make such a move. Now, if he had still had a vote, he said he would push for this larger cut. Now, Dudley's comments have certainly played a role in changing market expectations, and it's pretty clear that his voice still carries weight. These shifting expectations have caused a notable market reaction. The stock markets have been rising, potentially in anticipation of the larger 50 BPS cut, while gold prices have hit an all-time high. This suggests that the market is concerned about inflation and economic stability. Now, if we look at the gold chart, we can see this trend clearly, right? With prices spiking as the market digests the possibility of a more aggressive Fed move. Historically, there are some important parallels to consider, right? This is not my data, it's from Charlie Bilello. Look him up on Twitter. But as we can see in 2001 and 2007, the Fed implemented similar 50 BPS cuts after hiking cycles, which were followed by significant market turbulence and recession, right? If we take a look at the chart, history raises concerns that a 50 BPS cut next week might indicate deeper problems within the economy, potentially foreshadowing a more significant downturn similar to those past financial crises, right? I mean, if we know it's not going to be playing out to the tick, right? But history often rhymes. And if we take a look at the previous time, where on September 18, 2007, we had the first rate cut, we got the 50 BPS rate cut. We were trading at an all-time high, right? Then we got the cut. Initially, we saw a move upwards, and then everything started to settle in that, economic downturn, right? It's probably weaker than expected, and then it head into a recession. Now, if you take a look at this, right, all-time high, we saw a similar pullback. Now we're creeping upwards, heading into a potential 50 BPS cut. Now, of course, there are other things to consider, like the money supply and so on, but I think, it's good to be aware of the overall dynamic, all right? That being said, if we take a look at the calendar on the Forex Factory, we need to keep an eye on key economic indicators ahead of this Fed decision. The Empire State Manufacturing Survey for September will be released on Monday. It's followed by industrial production and retail sales data for August on Tuesday, and August housing starts figures on Wednesday. Now, any sign of weakness within these data points could further increase expectations for a larger rate cut. Now, that will mean, in my opinion, short-term upside, or at least short-term to intermediate-term upside among risk. And, then we'll have to see. I think if they decide to do a 50 BPS cut, the pressure is going to be very important, because we need to see what are they going to be saying in regards to the 50 BPS cut, right? Are they going to be calming down the markets and whatnot? So this is going to be very important. Overall, I think we're getting a flat line into the FOMC, and then we're likely going to see the direction for a while. So that wraps up the fundamental approach that I have for next week. Now, let's move over to the charts on Bitcoin, and we're going to be starting with a yearly time frame. Within the previous stream, I've mentioned the importance of yearly VWAP, and that, it has been bracketing throughout yearly VWAP here, right? If we take a look at the drawing on the right side, we basically have a value area high, point of control, and then we've got the value area. This should be a value area low, my bad. So if we're going to be going bullish from this point on, I will allow for a short-term deviation below. Let me zoom in for you guys. So I will allow for a fill of this gap here, right? Because we have a fair value gap here on the daily. If we rebalance that gap into previous structure, and then we can maintain yearly VWAP, or in other words, point of control as support, I think we're heading higher to fill in this inefficiency there and potentially towards value area high where the real test will be. If we take a look at the previous interactions, we can clearly see that right here, developing value area high has been resistance, developing value area low has been support. Yearly VWAP has always been a great indication of where we are heading on a larger time frame. Now, I want you guys to take a look at an example that I have from 2021. And we're going to be starting off on the left side of the chart right here. We've got yearly developing value area high here. And when we're in a trending environment, if the market is imbalanced up and it retests developing value area high support, it's always a good interaction for continuation higher. The moment we start to see a deeper shift within developing value compared to the previous interactions, it is often going to be, you know, a shifting condition where we go from an imbalanced market towards a rotational market. And what happens next is that we are unable to accept back above developing value. And what do we do as per laws of market dynamics, right? If I were to draw that out right here, whenever we have value and we break away from value, this initial break from this point, this origin needs to hold a support, because if we don't, we get a retest. And if we don't break away at that point, we're likely getting a reversion towards the opposite extreme. And that's what we got right there, right? Failure to accept back above developing value area high, then we puke towards developing value area low. The other thing that I think is very interesting to see here is the moment we start trading, this is yearly VWAP, right? In 2021. The moment we start trading above yearly VWAP, holds support, and then we're getting a rotation towards what? Towards the next likely destination, which is developing value area high. It remains resistance until proven otherwise. We're getting capped, rotate back towards VWAP. There we form a low, you know, a deviation below that low, but still unable to break below yearly VWAP. Close back above. Where do we go? Yearly developing value area high, and eventually we take out the previous high. So this just goes to this just shows you guys that yearly time frame is very important, and yearly VWAP, once it is getting reclaimed, I genuinely want to see continuation right off the bat, right? I don't want to see, you know, strange interactions whatsoever. I would prefer to see maybe 1, 2, 3 days of range bound environment there, spike lower, maybe on FOMC, reclaim, and then continuation higher. That will be ideal in my opinion for the longs that we caught during last stream. All right. Taking a look at the quarterly VWAP. Right here we have previous quarterly value. As we can see, once we start to trade back within previous quarterly value, right, we rotated towards previous quarterly VWAP, resistance, acceptance above. Where do we go? Previous quarterly value area high. Going forward, I think, considering the previous interactions here, right here, right, we've got one attempt to break above previous quarterly value area low, failed to do so. Another attempt, rejected again, right? Then we saw a bracketing environment. At this point in time, we accepted back within previous quarterly value. It should have held a support. The moment we accepted back below, we opened up the 12-hour, retested it there, and then we sold off all the way down here. Now, if Bitcoin was bearish, and this is where we did the previous stream, right? Or I think it was here, I'm not too sure, but we did it. If Bitcoin was bearish, I think we did it within this candle. This should have held as resistance because it's the value area low from a quarterly developing value. And the reason why I was, you know, I said that it needed to hold as resistance is because we're not just trading within the first month or whatever, 2 months of the quarter. We're trading in the final month of this quarter developing value. That means it is very important, right? It is a very contextual statement in terms of the value area low, value area high, and so on. And that's why I said, if we're getting a retest of developing value area low, this is where you want to be looking for longs. And we're going to be targeting the highs into VWAP and potentially previous quarterly value area low. Now that's the trade that we discussed during the previous stream. What are we going to be looking at going forward? Well, again, if we're bullish on Bitcoin, I need to see, I don't really need to see this hold to the tick, but I would prefer to see some sort of a range here, right? I will allow for a retest of the origin of the break right there. And then I need to see acceptance above. And I think, the ultimate destination for this move higher will be determined if we're going higher or not by this previous quarterly value area low. Now you might say, well, we can still go towards yearly developing value area high, right? If we take a look at the yearly again, I mean, C2 value area high is around 69K. Yes, it is. However, if we move forward, right, we got quarterly, then we have monthly, and then I briefly want to go over to this 5-month composite. We've got a 5-month composite value area low. It's value area higher, but it should be value area low, around 62K. So 62K is confluence with previous quarterly value area low. Now that, to me, that's the most important price point going forward for longs. If we genuinely are going for a bull market, I need to see a shift back within that monthly composite, okay? That level is in line with the 6-month composite. Yeah, exactly. It's the 5-month composite, brother. And the reason why it's 5 months is because the previous 6 months has actually accepted back below the previous 5 months. So, value migrated lower. So that's why I didn't add it within the 5 months. So 5-month composite. Moving forward, monthly VWAP. Now, a couple of things to cover here. We've got a fractal where we are accepting within this example. We saw a shift back above previous month value area low, right? Then we saw an initial low. We spiked that low, and then we retested it once again before we saw a rally higher. Now, this move, didn't follow through because we accepted back below previous month VWAP. That was bearish. However, if we fast forward to what we have today, we've got an initial low around previous month value area low, puke below that low, right? And then we reclaimed previous month value low once again, ticked it to the T, acceptance back above monthly VWAP. That was your confirmation. Where do we go? Previous month VWAP, and now we're trading back within the upper half of previous month value. This brings me towards what I'm looking at going into the remainder of the week, right? Because I think if we're going to be getting quality trades, it is going to be based around that point of control and that value area high. And this value area high actually lines up with monthly VWAP and a previous month value area high, right? So this is a very important pivot. Where is it? 62K again, lines up with quarterly value and so on. Moving forward, 30-day rolling VWAP. Now, 30-day rolling VWAP is a tool that I like to use to determine whether or not we're breaking away and we're moving into a trending environment. Below the 30-day moving average, 30-day rolling VWAP. Oh my God, moving average. Below the 30-day rolling VWAP, we're bearish. And it's, I think it's pretty clear here that once we start trading below the orange line, which is the 30-day rolling VWAP, resistance, we had lower. Resistance, we had lower. The moment we accept back above, we get at least a short-term rally towards the upside. The moment we accept back below, rejected hard, right? This was a beautiful short entry. There we go, all the way back towards this low. Then we start auctioning back above, right? Another nice rally higher. Once we accept it back below, puke lower, resistance, right? So the only exception to the rule was this deviation. And I really wanted to see this hold of support, but it failed to do so. And now that we're trading back above with equal highs here, we got a gap there, right? I'm thinking that considering that the 30-day rolling VWAP here is actually confluent with previous month VWAP and monthly developing value area high, I think going into the remainder of the week, or not remainder of the week, but going into next week, we genuinely need to see 59K hold of support. Yeah, that would be a great long indeed. So right here brings me towards the 5-month composite. The 5-month composite is based on the start of March until the end of July, so August 1st. That's the composite. If we take a look at previous interactions with the value area low, unable to accept above, unable to accept above, unable to accept above. This was a deviation, right? Just this was truly depressing because we finally accepted above back within a 5-month composite, and then we just puke straight back below, right? So this was bearish. Now that we're seeing some signs of reversion, that same value area low, and I don't know why I keep typing value area high right there, but this value area low still remains a very, very, very important resistance, because if we are going to be seeing a shift back within value, that tells me that as long as 62K holds the support, we're getting a leg upwards towards the point of control around 66K, above these highs, above this high, and that will be a great swing long, similar to the spike that we have from this low, right? That's the next best opportunity besides a potential retest here of that previous month VWAP. But I still think that if we're getting acceptance back within a 5-month composite, guys, that means that we might be opening up the road for potentially a retest of the point of control and a potential retest of the value area high. Now, above value area high, above 70K means we're trading above 5-month composite value area high. We're trading above yearly developing value area high. And at that point, I think we're going into a full-blown bull market mania, weird shit happening, right? So if we go through all of these charts, right? Yearly, rotational, hovering above point of control, bullish. Right here, this was an example on the 2021. Quarterly VWAP, retested value area low support, auctioning around point of control. I will allow for some chop, right? That's usually the case around point of control, but eventually need to see higher time frame closes above with a potential destination of previous quarterly value area low. So in my opinion, bullish. Monthly, we saw a fractal at previous month value area low. We're seeing the same thing right now. We're one low, sweep the low, reclaim, retest, support. We're auctioning above a previous month VWAP, point of control, bullish with a likely destination of value area high around 662K. So the final chart, 30-day rolling VWAP, we're above, bullish. Then we've got the 5-month composite. This remains the most important reference point in terms of resistance. It is a likely destination. Are we bullish on the higher time frame in terms of a 5-month composite? Are we bullish here? No, right? This remains resistance. So if we try to accept back above and we reject hard, I will be looking for shorts for a potential move back towards this structure if we don't retest this right away. Moving everything within a single chart gives me a chart of, zooming in here, previous quarterly 5-month value area low around 65.5K. Now these can differ $200 whatsoever. It doesn't really matter. You need to treat these areas, these lines as an area, not a singular line. Okay. We've got previous quarterly value area low, previous month value area low, value area high, my bad, and a 5-month value area low right there at 62K. Resistance, resistance. We've got previous month VWAP, monthly developing value area high at 58.7. We've got a previous month value low and a quarterly developing value area low around 55.7 as well. Retested it. This was that initial range right there. TP. Now we're back above. Now what's the next range that we're trading? The next range that we're trading, based on what we covered, everything based on yearly, quarterly, monthly, a composite 30-day rolling VWAP, and so on. The next range that we're trading, this range. So if we're going to be forming a range here, right? Range high, range low, and we get a deviation, we fill in this gap there into fresh demand, right? Down close candle before we took out the highs there. And we can close back above previous month VWAP and the monthly developing value area high. This is going to be your long trigger. And you're going to be targeting the shitty high right there, confluent with that high right there into this gap, confluent with previous quarterly value area low. So we're going to be looking for longs from 58.7 towards 62K, right? But what happens if we start trading lower and we lose this as support? Well, shifting gears, because at that point, this is the range again. So we're going to be looking for shorts playing it lower, right? So the ranges that we're going to be trading within are this range, that range, and that range. And anything in between is noise, right? Acceptance above previous quarterly value area low. Sure. Looking for longs. Then we're going to be targeting this shit high there into previous quarterly VWAP. Acceptance above, we're all getting new girlfriends. Failure to do so, we're back towards 62K. Below 62K, we're back towards 58, right? So no matter what happens, we have now determined that we are going to be trading this as a range. We're going to be trading that as a range. This as a, whoops, and this as a range, right? So 1, 2, 3 ranges going into next week. You will see that, and that's what I tweeted. I tweeted when we were moving lower here. I said, if on US Open, the market gets spooked by, what was it? Something came in hot. Was it CP? I can't really recall, but something came in hotter than expected, right? And I said, you know, if it's coming in hot and the market gets spooked, I will look for longs around previous month value area low. And I genuinely, I mean, don't get me wrong, because I've covered it in the beginning of the stream as well. It is good to understand the underlying drivers of why we're heading higher or why we're going lower and so on. But usually what you'll see is that no matter what happens, if you know when and where to trade in terms of, you know, your contextual levels. Now, I'm using VWAP, right? If you want to use something else, I'm not saying that you shouldn't be using, or that you should be using VWAP, or that it is the only tool whatsoever. But if you know when and where to trade, then you're definitely ahead of the curve. And what happened? We saw a puke lower. Buyer stepped in. Where did it step in? Previous month value area low. Well, boohoo. What a surprise, right? So now that we're trading back above, let's say that we're not going to be following this week's fundamentals, or, you know, the data release on FOMC. If we're getting a drive lower, I don't care if it's going to be a recession or whatnot, or, you know, 50 BPS or 25. I just want to see this hold of support. And if we can do so and reclaim that previous low, and we have a large amount of shorts getting absorbed that are now fuel for the next leg up, who cares what Powell says? Because these will get squeezed first, right? So I think focus on these levels heading into this week, and we should be fine. Is that clear for everybody? All right. Any questions so far? So, you know, we've covered what we're expecting. I think, you know, it's going to be a tricky week nonetheless, because it's 50-50. Hasn't been like this for a long, long time. Usually it is, you know, 80-20, 70-30, or at least that the market is, you know, anticipating one or another, but not 50-50. So it's going to be tricky, right? We've got this gold going all-time highs. This is going to be very important. It's going to be interesting. Of course, dynamics are different right now, but, you know, we've got a pool of 1, 2, 3, 4, 5 times that we can take a look at historically. 2 times our 50 BPS cut, 2 times recession. So, you know, do with that what you want. We've got this fractal, which can play out. Not saying that it should, but it can play out, you know. And then we've got the calendar with the other charts. And, you know, I think with that, I would like to conclude today's live review on Bitcoin and the outcomes for next week. I don't see, you know, I think 30 minutes, it should be a sweet spot for everybody to have focus. And, you know, we can cover everything within 30. So with that, I'm going to be closing off the stream. I would sincerely appreciate you guys if you can just leave me a like. Helps me grow the channel. And with that, I wish everybody a fantastic Sunday evening, Sunday afternoon, depending on where you are. And I will see you guys in the next one. Yep. Take care, guys. Peace.